The Securities Exchange Commission, known as the SEC, has officially approved a spot Bitcoin ETF. In this video, we're going to talk about the hack that happened yesterday to give a little bit of a background, the official approval of the spot Bitcoin ETF, and then the last thing that we're going to be going over is a possible trade going live tomorrow for the spot Bitcoin ETFs and what this could mean for our markets. So make sure you guys tune in all the way to the end of this video to find out all the details. Hey guys, it's Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys can go in and like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. If you guys could, share my videos and share my channel with anyone. I'm trying to grow my channel as much as I can. I definitely need your guys' help in doing so. Getting started, today's be Wednesday, January 10th. The total market cap right now for all cryptocurrencies is $1.76 trillion. We are at a 3.22% increase on the day today, and this, in my opinion, is due to the approval of that spot Bitcoin ETF. Fear and greed index right now, we are at a 74. I do see us going to an extreme greed. Again, make sure you guys do your guys' own independent research, and anything I say should not be considered financial advice. Bitcoin right now is currently trading at $46,061, Ethereum $2,583, and XRP right now at 59.64 cents. If we look at the price of the Bitcoin as the ETF was officially getting approved, Bitcoin was trading at a low right before the ETF got approved at $45,300. And then once the approval came out, it slowly started to trend up before having a massive green candle topping out $47,647. Now, we did start to bottom out from this peak because obviously the price is not going to keep on going up. Also, trading's not live yet, so we might see a trade live tomorrow. We're going to talk about that towards the end of this video. If we look at Ethereum, because this is the number 2 per market cap, we did see that Ethereum did go above the $2,600 level. And then we look at the XRP chart because XRP had a nice run up and XRP did go above 61 cents. So that was good to see. Looking at our biggest gainers and losers on the day today, we have ETC up right now 35%. We got eHex right now up 29.4%. And then we have regular Hex right now up 27.7%. Overall in the market, though, we're up green by more than a couple of percent. So we're going to have a majority of our cryptocurrencies in the top 100 green. It's nice to see ADA up here right now. Cardano up 13.4%. HBAR up 7.4%. And then we talked about how XRP was up roughly about 4%. Biggest losers, we don't really have that many, but we do still have some. TAO is going to be down 5.4%. We got BSV is going to be down 3.6%. And then we have AKT is going to be down 1.8%. Looking at what our background information was, because we had a hack at the official SEC's X account yesterday. So a little bit of a background. Yesterday, the SEC posted on their account, which was hacked. So somebody else posted this, but says today the SEC granted approval for a Bitcoin ETFs for listing on all registered national securities exchanges. The approval Bitcoin ETFs will be subject to ongoing surveillance and compliance measures to ensure continued investor protection. Now, this ended up being a hack, and about 14 minutes later, Gary Gensler, who's the chair of the SEC, comes out and puts out a statement saying that the SEC Gov Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the listings and tradings of spot Bitcoin exchange traded products. Now, this was on 1/9 and today is 1/10, so this did happen yesterday, and this is where we saw a lot of price action going up and then down in the markets especially. So a lot of price manipulation in my opinion. Now, if you did have some price manipulation, CoinDesk did say that nearly $90 million worth of Bitcoin longs and shorts. So if you guys were betting against or for the price of Bitcoin to either go up or down, were liquidated after a series of fake tweets on Bitcoin ETFs approvals led to the price volatility. And he's a lawyer, and he says that if you guys did have any damages, if you suffered any due to negligent supervision by the SEC Gov and its X handle regarding the false announcement, you guys can give him a DM or email contact at holdlaw.org for a follow-up. Some of my viewers do trade. I don't trade right now. I don't really care to. Maybe in the future I will. But if you guys want to, you guys can contact him. John Deaton comes out and says that in a perfect world, Gary Gensler would be held liable for this $90 million. He'd still have $30 million because his net worth is about $120 million, so he'd still be okay. Maybe if he didn't meet with Vanguard, which manages his personal fortune so many times as chairman of the SEC, he could have had the meeting with Brian Armstrong, who is over at Coinbase. He's the CEO right now over at Coinbase, and then we have Paul Grewal, who's the chief legal officer over at Coinbase, and maybe he could have learned how they implement cybersecurity protocols. Now, Eleanor Tourette posts a little fun because on the SEC, they did announce that they are now also on Instagram, and due to the nature of the hack, they actually came out the X safety account for Twitter, X, whatever you guys want to call it, did say that the hack did happen because the Securities Exchange Commission account does not actually have two-factor verification. So she pokes a little bit of fun saying, "Oh, you guys came out with an Instagram. Awesome. Do you guys have two-factor verification, right?" Question mark. Now, Gary Gensler posted on the SEC Gov's account. So this is the official website of the SEC.gov. Um, we're going to read this into its entirety because this took so long for this to happen. It took roughly 10 years since the first Bitcoin, spot Bitcoin ETF application to go through. And that's why we're going to read this, because it has such a significant impact for our markets. So, Chair Gary Gensler states, today the commission approved the listings and tradings of a number of spot Bitcoin exchange traded product shares. I have often said that the commission acts within the law and how the courts interpret the law. Beginning under Chair Jay Clayton in 2008 and through March 2023, the Commission disapproved more than 20 exchange filings for spot Bitcoin ETPs. One of those filings, made by Grayscale, contemplated the conversion of the Grayscale Bitcoin Trust into an ETP. We are now faced with a new set of filings similar to those we have disapproved of in the past. Circumstances, however, have changed. The U.S. Court of Appeals for District of Columbia held that the Commission failed to adequately explain its reasoning in disapprovals in listings and trading of Grayscale's proposed ETPs, the Grayscale order. The court therefore vacated the Grayscale order and remanded the matter to the Commission. Based on these circumstances and those discussed more fully in the approval order, I feel that most suitable path forward is to approve the listings and tradings for these spot Bitcoin ETP shares. The Commission evaluates any rule by a national securities exchange based upon whether it is inconsistent with the Exchange Act and regulations thereunder, including whether it designed to protect investors in the public's interest. The commission is merit neutral and does not take a view on particular companies, investments, or assets underlying an ETP. If the issuer of a security and the listing exchange comply with the Securities Acts, the Exchange Act, and the Commission's rules, the issuer must be provided the same access to our regulated markets as anyone else. Importantly, today's commission announcements is conveying to ETPs holding on one non-security commodity, Bitcoin. It should in no way signal the Commission's willingness to approve listing standards for crypto asset securities, nor does the approval sign anything about the Commission's view as to the status of other crypto assets under the federal securities laws or about the current state of non-compliance of certain crypto asset markets participants with the federal securities laws. As I've said in the past, and without prejudging any one crypto asset, the vast majority of crypto assets are investment contracts and thus subject to the federal securities laws. Investments today can already buy and sell and otherwise gain exposure to Bitcoin at a number of brokerages houses through mutual funds on national securities exchanges, through the peer-to-peer payment apps, on non-compliant crypto trading platforms, and of course through the Grayscale's Bitcoin Trust. Today, the actions will include certain protections for investors. First, sponsors of the ETPs will be required to provide full, fair, and truthful disclosures about the products. Investors in any Bitcoin ETPs that is listed and traded with benefit from the disclosures, including the public registration statements and all required periodically findings. While these disclosures are required, it is important to note that today's action does not endorse the disclosed ETP arrangements such as custodial arrangements. So this is where if you guys wanted to choose a certain Fidelity, BlackRock, Citadel, and then also who they actually choose to finance those, that's a little bit different. They don't control that. Second, these products will be traded on registered national securities exchanges, such as regulated exchanges, are required to have rules designed to prevent fraud and manipulation, and we monitor them closely to ensure that they are enforcing these rules. Furthermore, the Commission will be fully investigating any fraud, manipulation of the securities markets, Maybe they should investigate themselves, also have somebody else who's non-biased, including in the schemes that use social media platforms, such as regulated exchanges that have the rules designed to address certain conflicts of interest, as well as to protect investors in the public's interest. Further, existing rules and the standards of the conduct will apply to the purchase and sale of approved ETPs. This includes, for example, regulatory best interests when a broker dealers recommended ETPs to retail investors, as well as a fiduciary duty under the Investment Advisors Act for investment advisors. Today's action does not approve or endorse crypto trading platforms or intermediaries, which for the most part are non-compliant with the federal securities laws and have often have conflicts of interest. Third, commission staff is separately completing the review of the registered statements for 10 Bitcoin ETP simultaneously, with the help will create a level playing field for issuers and promote fairness and competition, benefiting investors in the broader markets. Since 2004, the agencies has had its experience overseeing spot non-security commodity ETPs, such as those holding certain precious metals. That experience will be valuable in our oversight and on spot Bitcoin ETPs. Though we must be merit neutral, I'd note that the underlying asset in the metals ETPs have consumer and industrial uses, while in contrast, Bitcoin is primarily a speculative, volatile asset that's also used for illicit activities, including ransomware, money laundering, sanction evasion, and terrorist financing. While we approve of the listings of the trading of the certain spot Bitcoin ETP shares today, we do not approve or endorse Bitcoin. Investors should remain cautious and in a fully myriad scheme risks associated with Bitcoin and products whose value is tied to crypto. So thank you guys for that. It took a little bit in this. If you guys want to read a little bit more in depth of the official ruling, it's here. These are the official SEC approvals of all spot Bitcoin ETPs. VanEck, Bitwise, Fidelity, Franklin, Valkyrie, Hashdex, ARK Invest, Grayscale, BlackRock, Wisdom Tree, and Investico Galaxy. Now, Ellen Tourette wants to point out that there was a vote that was officially held, and here's the voting breakdown. Gary Gensler did approve. Hester Pierce approved. Uineta approved. Crenshaw denied, and then Lizarrange not denied as well. So these two individuals did not approve. Watcher Guru did post their photos. For those of you guys that want to know what they look like, we all know who Hester Pierce is because she's been prominent in the crypto industry, wanting to promote digital assets, and they actually do have real world utility, even though Gary Gensler says they try to remain neutral. But obviously he did say in his statement that they are used for fraud and stuff like that, which means he's not merit neutral. Paul Grewal does say that this is a big deal. He's the chief legal officer over at Coinbase. But keep in mind that this is almost didn't happen. We shall be grateful to Grayscale for pushing back against the SEC's arbitrary and capricious behavior and clearing the way to get these spot BTC ETFs over the finish line. And of course, to the DC District Circuit for affirming that the rule of law must be prevail over politics. This is something that makes markets have been calling for, and now even more people have access to crypto through convenient and highly regulated products. So in my opinion, I agree Grayscale did do very well, but where were a lot of these people when XRP or Ripple was involved in this lawsuit to determine if the XRP token was considered a security or not? Stuart Alderado, who's the chief legal officer over at Ripple, says Commissioner Pierce is spot on. This is long overdue for approval. Comes only because the courts checks an out of control regulator. Gensler's battle royal against crypto has turned the SEC into a caricature not to be trusted by the public, policymakers, or judges. Zach Rector does share. David Schwartz, who is the CTO over at Ripple, says prejudice against underlying assets. The only material changes since we have denied a similar application was judicial rebuke. And he's sharing Hester Pierce's views. He highlighted a couple of things. We squandered a decade of opportunities of doing our job because I told you guys it was 10 years since the last filing, since the first filing of a spot Bitcoin ETF. Apply a test that applies nowhere else. And that's the law. We saw that the Howey test, and then he comes out and says, well, the Howey test can't be used. It has to be a different test. So that's where they're saying the other test. And then the many harms that have been created. So Hester Pierce's statement is right here, and it's very long and lengthy. We're not going to read this one in its entirety, but she does state, and I wanted to point this out, that today's orders do not undo the many harms. That's what we showed about of here with David Schwartz. that is created by the disparate treatment of a spot Bitcoin products. And she lists a bunch. So, first, our arbitrary and capricious treatment of applications in the area will continue to harm our reputation far beyond crypto, so harming the SEC. Diminished trust from the public will inhibit our ability to regulate the markets effectively. This saga will taint future interactions between the industry and our staff and will dampen the rich, informative dialogue and the best product protects investors. Second, sorry guys, it's a long day. Second, our disproportionate attention to the filings have diverted limited staff resources away from our mission critical work, and this is protecting the investors. Over 10 years, likely millions of dollars of staff time has gone toward blocking these applications. Third, our actions have muddied people's understandings of what the SEC's role is. Congress did not authorize us to tell people whether a particular investment is right for them, but we have an abused administrative procedures to withhold investments that we do not like from the public. Fourth, by failing to follow our normal standards and processes in considering spot Bitcoin ETPs, we have created an artificially frenzy around them. Had these products come to the market in a way other comparable products typically have, we would have avoided these circuses atmospheres in which we find ourselves in now. Fifth, we have alienated a generation of product innovations within our space. Our unreasonable approach to these applications have signaled that regulatory prejudice against new products and services can lead to a sidestep law and unreasonably delay product launches. The industry has logged hundreds of meetings, has filed submissions, withdrawals, and amendments, and ultimately had to resort to costly legal battles to get us to today. And that's what Grayscale did. Now, Brad Garlinghouse did point out that the significance of this movement cannot be overstated. Congrats to those who have all worked to get Bitcoin spot ETFs approved. Today's news is further uh, legitimizing of crypto as an asset class. I expect this will be yet another catalyst for institutional investments adoption, ideally leading to the industry to focus outside primarily speculative to broad real-world use case and underpinning that legitimacy. So he comes out and states that obviously we've had a decade of United States of not having innovation with crypto markets. Majority of big banks don't like crypto assets, in my opinion, because it's going to take away how big banks make money. And this is why we saw a lawsuit, in my opinion, against the SEC, against Ripple. Now, Eleanor Tourette says SIBO says that they have received and approved Investico's U.S. application to list Investico Galaxy Bitcoin ETPs or ETFs on its platform. Now, SIBO is going to be doing a lot. So the majority of these assets right here, their applications, so a majority of all these applications will be listed and being able to be traded live tomorrow is what they are doing. So they waited for the SEC to approve them to go live. They're probably going to go live tomorrow, and we will see, in my opinion, a price fluctuation. We did not see a buy rumor sell the news event today. Will we see this tomorrow when official trading does go live? Only time's going to tell. But with institutional money now being able to be put into crypto assets through a technical security now, because when there is a spot Bitcoin approval, if you buy the spot, that is considered the security. But if you own a digital Bitcoin itself, buying it through like Coinbase, Uphold, Binance, for example, that right there in of itself is not a security, and especially with the XRP token. Gary Gensler did point out that the other crypto assets are not securities or not commodities yet. They have to go through all of those. They're going to keep on doing these lawsuits. Hopefully, with Hester Pierce's remarks, we can see a different change or a shift in the ways the SEC actually goes about doing the things that they've done, because they're getting just walked over and ran over in court. Zach Rector wants to point out that XRP ETPs is coming whether we like it or not, and no, it does not make XRP a security. And this is because of a ruling from Judge Annalisa Torres, who did rule that XRP in and of itself is not a security. Now, put down in the comments what you guys think. Are we going to see an Ethereum A spot Ethereum ETF, or are we going to see a spot XRP ETF first? In my opinion, I don't want it to happen, but I do see an Ethereum ETF going to be put first before an XRP ETF, but only time's going to tell. I do see us going up in the markets. That's my personal opinion, not financial advice, but we'll see. I look forward to you guys in the next video. Thank you guys for tuning in. If you guys can invest with the big dog, stay on the porch. Thank you guys and have a good one.